What's up, everybody? Shane here from the Brookings home team, powered by Century 21. We are ready to do another Monday morning mortgage tip. And again, this is pre-recorded. We are not live, but cross our fingers. Hopefully, shortly we'll be back to somewhat normal, is what people call it. But Justin is back again today for our Monday morning mortgage tip. Justin again is from Fairway Mortgage. So if you have questions for him or anything there, feel free to reach out to him. His information will be on the top, on the bottom, or on the sides, wherever your device allows you to see that. So with that being said, Justin, what is the word today?
Yeah, thanks for having me today, Shane. Today I wanted to spend a little bit of time talking about what's called paying for points on your mortgage, or buying down your interest rate, it can be referred to as well. It's kind of been a hot topic lately, especially with where rates are at in great shape already. It's made it even more lucrative to spend a little bit of extra money up front at closing to be able to get a little bit lower interest rate. And so essentially what the gist of paying for points on your mortgages, without getting into all the nuts and bolts of it, essentially what happens is you can elect to increase your closing costs and your out-of-pocket expense at closing by a relatively small amount in order to secure a lower interest rate for the course of the loan. And so just one random example, and I should put the disclosure out there that this is not where the rates are at right now. This is just a hypothetical scenario. And so, like, let's say, for example, if you're buying a house and before you did any sort of buy down or paying for points, if your rate was at, let's say, a 3.375%, what could potentially happen is you could, maybe spend an extra $1,000 at closing to get that lowered down to, maybe a 3.125 or maybe even a 3% flat. And so, so that's kind of how that works without getting into the nuts and bolts of it. Definitely would suggest that you talk with your lender about it if you're in the process of either refinancing or purchasing a new home. There's a number of factors that go into whether or not it's a good idea for you. One of the big ones is how long are you planning on being in this specific house? Because with that added upfront cost, there's of course break-even points that need to be calculated and some different factors along those lines. And so, so yeah, that's just the gist of what I wanted to talk about today as far as paying for points on your mortgage and whether or not it's a good idea for you to look into or not.
No, that's good information. Like you said, the rates are low, and it's, he keep using the word or the phrase free money, but it's getting pretty close to free money. And if you can buy some more free money, why not do it? So
definitely.
Yeah, and we did have something on this, I think, a while back ago, but it's always good to refresh, and probably the rates weren't near as good as what they were at that time either. So
I doubt it.
Great information, and yeah, you could really get into a nice home with 2%, 2.5%, wherever you think you could buy down to. So, got any questions again for Justin? Let him know. Reach out to him. Reach out to me, and I'll put you in touch too if you need it. If you have any other questions relating to mortgage that you'd like answered, let us know as well, and we'd be happy to answer that on our next episode. And as always, feel free to share or tag this video with anybody else you think would be interested, and feel free to let everybody know. But Justin, thanks again.
Yeah, thanks, Shane.
Appreciate it. And get outside, enjoy this nice weather, and we'll just keep moving on. So
sounds like a plan.
All right. Thanks again for everybody for watching. Have a great day, and we will see you next week. Till then, see you later.
Thanks, guys.